traders, Cousin Vinny coming to you from theclosingprint.com, Sunday, June the 14th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which had a rather bearish week, thanks to the Thursday move after Powell spoke, leaving the markets with the major message of no interest rate hikes until 2022. That spooked the market, especially the financials. The bank stocks were mixed, and most of our signals are neutral to slightly bearish going into the week. Put call is neutral. VIX faded from 44.16, the high of the day on Friday, down to 36, so that was a pretty big drop intraday. Bullish percent pulled back to 71%. So as bullish percent pulls back, that's giving us more energy if it does reverse and stocks bounce before they become overbought again. US dollar did bounce off of the lows. RSI is oversold, so we could see a rally in the US dollar, which would affect commodities. Copper is trending. That moved higher on Friday as well. And West Texas crude finally took a break after moving higher for 6 weeks straight, up over 500% from its 2020 lows. The heat map turned more neutral with more lime greens showing up for both the S&P sectors and for the international market. So be cautious this week. We'll look at some IBD 50 names that look pretty good. The ones with yellow and an asterisk are Chinese stocks, so be cautious trading these names because they're very news sensitive. And we'll look at the Dow 30 that are showing strength this week. Bukowski has 3 of 5 red with the CPI signal half red since June the 9th, moving from 99% last week, very bullish, to 0%, which is very bearish. He has 3 bearish patterns, 0 bullish patterns, and 74 patterns waiting for breakout. You'll remember back about 4 weeks ago, we had about 700 stocks ready for breakout, and we mentioned that setup was pretty bullish. We've since moved to 74, so that's telling you to be cautious this week as well. Bottom line, we're in day trade mode, short-term swings. Combined SPY S&P 500 gamma support remains at 300 for SPY and 3,000 for S&P 500 going into the week. So I'd be cautious going into the first hour of trading on Monday. I wouldn't do very much unless we see a very obvious signal, whether it's bullish or bearish, to start the Monday session. Starting off with SPY weekly, we have RSI remaining above 50, price action nearly printing a bearish engulfing candle for the week. We would have needed to see a close underneath the low of this previous candle and closing the entire body. I'm less interested in the wicks as per Tom Bukowski's interpretation. Some people will take the wicks, which would give you a weekly bearish engulfing. That said, we do have the moving averages below price action. That was a pretty nasty week. Momentum is still with the bulls, so in order for the bulls to lose it, we need to see another bearish week. That would be possible if we lose the 3,000 level, which is the major absolute gamma levels that we've been following into this week, with resistance overhead at 30.50, which aligns with 305 on the spiders. In addition, the Renko chart, which removes the noise from the markets and is basically like a point and figure chart, Renko filled a red brick, telling us to be open to the possibility of more downside before seeing a bounce. We'd have to see a white brick for this signal to turn back to bullish. Therefore, on the daily time frame, we need to see SPY bounce at this 200 period moving average level, a 7.8% drawdown from the Tuesday, Wednesday highs last week, major volume by price support as well as gamma support below. So this is a pretty hard area for the bears to pierce. If it does, that would forecast a potential move down to about an 11% drawdown the 50-period moving average. Macke did give us a cross with one distribution day last week. The next day, Friday, we did see a lot of buying with major short covering, but we didn't manage to get back above Thursday's high, leaving that major gap overhead to fill at some point in the future. This leads us to the 60-minute, of course, which needs to align with our VIX indicator, where we have RSI rising off of oversold. This is a pretty good bullish signal for a follow-through. We're bouncing off of that major support, while a 30-minute version of our VIX chart is giving us a green signal going into Monday trading. If we broaden our focus and look at 1,500 stocks on the S&P composite, 500 of the S&P big caps, 400 of the S&P mid caps, and 600 of the S&P small caps, we're still on a buy signal, but we have a little bit of caution showing up on a red signal here. So if this turns back down and crosses over, that would tell us to sell more positions. We have just dropped down below zero on the histogram, so that's confirmation. We're looking for a direction coming into Monday, Tuesday. Do we bounce at the midline of Bollinger Bands and the 21-period moving average, or do we fail and test these lows again? But in order for that to happen, we'd need to see these big cap FANG stocks failing, all moving below the 21-day moving average. So far, the only stocks closing at or below the 21-day are Google, Netflix, and Facebook. The takeaway is most stocks and sectors looked very similar. We hit all-time or 52-week highs on Wednesday, and we pulled back Thursday and Friday. So we'd need to see these leaders fail to get more bearish. Combining that thought process with the Dow Industrials, we see these 30 stocks pulling back last week. Boeing bounced on Friday. Caterpillar at the 21-day. Many of these stocks holding up fairly well, so we'd need to see these losing the 20 and the 50-day this week. Some of them already have, like Intel, Coca-Cola, J&J. The pharmaceutical stocks reversed on Thursday and have yet to bounce. McDonald's giving us a potential reversal signal, and Microsoft as well at the 21-day moving average. So in order for us to get bearish again, we need to see these 30 stocks dropping off as well and losing their 50-day moving averages. Recall that the NASDAQ 100 over the last 5 years usually dips in June and has the best month of the year into July. We would anticipate that there is a possibility of consolidation. We don't need to necessarily pull back in price. We could also move sideways in time, which would support the idea of the big cap tech stocks remaining in this zone. As we go into June OPEX on Friday, we did see some relative strength last week in technology stocks, in particular with software. So this is something that we'll be watching for early on Monday to give us a better direction for the week. That said, small caps did not fare as well. We can see RSI is dropping below 50. While we did print a bearish weekly candle engulfing the previous body and the wicks of last week's price action, encapsulating the wicks and the body of the previous week's price action back below the moving averages, while volume increased, showing us that we had a distribution week. Momentum is still with the bulls, so there is a possibility we could bounce on Monday, but it seems kind of unlikely at this point. So be aware of this 135 zone as support, this gap over here, and the gap we saw 3 weeks ago. We do have a gap fill now, so maybe there is a potential to move higher. Keep an eye on small caps this week. That's a risk on, risk off indicator. The New York Stock Exchange advanced decline of more than 2,900 stocks also gave us a reason to be more cautious. We dipped into the red zone. However, on Friday, we showed signs that we could resurface into the white area, which would tell us to look for a higher low and then potentially a higher high into options expiration on Friday. While the same 2,900 stocks on the New York Stock Exchange did manage to stay above the zero line, turning back up on Friday, we need to see the moving average turn up as well. In addition to the New York Stock Exchange advanced decline, this indicator takes the number of new highs and subtracts the new lows, giving us a quick calculation on whether or not we should be more bullish or bearish in the short term. Finally, we have the Wilshire 5000. RSI did dip back down. We're at the support zone where we broke out back in 2019 into 2020. So the bottom line is most of the daily oscillators and indicators are short-term, more bearish. However, the weekly oscillators and indicators are showing there's potential momentum that could transport us higher while expecting back and fill along the way, and potentially a test of all-time highs for the Wilshire 5000 as well. So just keep that in mind going into options expiration on Friday. The bond stock ratio between the 10-year bond and the S&P 500 has turned neutral to slightly more bearish as this red line continues to move back above the 65-period moving average. We pulled back in on the weekly time frame, S&P 500 in the top panel, to the 50-period on the weekly, while the GOVT bond ETF that has a basket of U.S. Treasury bonds in its ETF got rejected at the 50-period moving average. In addition, we see the cycle is more bullish than bearish. As this starts to turn, it leads us to believe that we could start a series of higher highs and higher lows. We got the higher high. Now we're looking for either a higher low or the fade and create a lower low. If we get a lower low, that would be bullish for equities going forward. And of course, if we jump above the 50-period moving average on this time frame, we would most likely see pressure on equities. Therefore, we are more neutral at the present time, watching for signals on bonds and more risky assets like the junk bond ETF. If you are bullish equities, you want to see this continue to move higher. And if you're bearish equities, expecting more downside, RSI would need to drop and junk bonds would need to drop below the 65-period moving average on this weekly time frame. This again is neutral as well. While the 20-year duration most investors are familiar with, traders take this when they think that equities are going to be moving lower. You'll see a surge in interest in the 20-year TLT. So keep an eye on TLT. Momentum has been more bearish lately, dropping below the zero line, histogram dropping below the zero line. RSI is bouncing, so we're watching for a follow-through. This again is right at the moving average, so this is neutral. While our investment in AGG, the Barclays Aggregate Bond Fund, continues to trend on this weekly time frame, we have yet to take the remaining portion of our position off, and that's done us well as this continues to move back up to that 118 level. In the short term, it looks like Macke is starting to turn, so this 10-week range that we've been in, we're at the top of that range, still trending. Potential to break out, but also a potential for us to come back into this range around 116, 115, which would be more bullish for equities if it does move lower into that range. We also see the U.S. dollar halting its decline on Thursday, reversing as potential safety trades start to increase. We're looking for the U.S. dollar to bounce. RSI is oversold. This is a bullish setup. Looking for more follow-through with the 200-period moving average as a short-term target. In addition, you could trade the UUP. This basket of currencies looks for the U.S. dollar to move higher. They use derivatives to do that. We're looking at MACD and stochastics giving us a bullish signal with a potential target, this upper range around 27, 27.20, 27.30 in the short term. So if you're interested in trading U.S. dollar on a bounce, check out UUP for a potential trade. Finally, if you're only interested in bullish correlated commodities as the dollar continues to move higher, you'd want to see copper continue this series of higher highs and higher lows. That would be good for the construction related names and the builders as well. If you're bullish, you'd also like to see crude oil positive correlation continue. We had 6 weeks up over 500% from this low. With a rest week, we could move sideways in crude oil. We don't have to pull back in price. We could just consolidate here in time before launching another move higher. If you're bullish equities, you want to see crude oil moving higher as well. Finally, there's the safety trade. Here is gold on the monthly time frame. You can see this very large cup, the right side being accumulation. Over the last couple of weeks, we've told you that we'd expect to see a handle or some consolidation in price action. So if we shift to the daily time frame, it should be no surprise that we're in this consolidation or sideways range over the last 8 weeks. RSI is trying to stay above 50, so that's something to watch as well. If the safety trade becomes more prominent in investors and traders' minds, you'll see gold break out of this range. If we manage to see a bullish follow through this week in equities, I'd expect to see gold move to this lower level around 1680 or so. Therefore, we're more neutral to slightly bearish on gold unless it breaks out this week. Looking at the sector heat map, we do have a few more reds in the healthcare sector, some lime greens, so this is tapering off a bit, which you would expect to see. As we discussed last week, most of the sectors were starting off the week at or near 52-week highs. We anticipated that we could see a pullback to the 21-day. That's confirmed with weakness in healthcare, XLV, and XLP, consumer staples, while utilities did pull back as well. The rest of the sectors look like they could follow through. Note technology is above the moving average, so I'd be leaning towards technology, as we mentioned, with growth stocks outperforming value, potentially rotation back in addition to what we're seeing in technology, industrials, financials, the communications group, and real estate. The Reits, we have a number of Reits that are showing up on the watch list this week, as well as what we'll review in a few minutes. So keep an eye on the Reits and the real estate group. Also keep an eye on the international group. There's a number of these that look pretty strong. MSCI All World Index is holding at the 21-day moving average. Argentina looks really good. We have a bounce in emerging markets, a hammer on Friday, looking for a follow through. Many of these look pretty good, so pause the video and check these out. So if you're very bearish, you want to see these roll over. Otherwise, it looks like we could get a nice bounce this week. Here is the IBD 50 list for the week. 50 of the best growth stocks as ranked by Investors Business Daily. Many of them are moving above or have recently tested the 21-day moving average, like Adobe on Thursday, bouncing back to 52-week highs. Those are the types of stocks that we're looking for with relative strength. Despite the pullback, many of these are seeing a trend continuation. Buyers stepped up in a big way on Friday, Adobe continuing to follow through into an area of no overhead supply. RSI is above 50. Macke is flat but above its signal line and above zero on a huge increase in volume. As growth stocks and in particular software related names like Adobe continue to move higher, keeping in mind that Adobe creates the creative suite of software, Adobe Photoshop, Illustrator, among others, that advertisers and media related names use quite often in their promotions. So if the economy is starting to improve, we could see a continuation in stocks like Adobe and growth names in the cloud space like Microsoft, Workday, etc. So we'll review those in a minute. In addition to the strength we saw in the real estate sector, looking for a follow through off of this bounce near the 21-day, the 50-period moving average, the green line. Looking for price action to get back above these volume by price bands into an area of less supply. RSI is above 50, volume increasing with MACD above its signal line and rising. American Tower, another REIT that owns wireless communication towers and property. RSI is above 50, bouncing as price action moves off of the 21-day moving average. Love to see above average volume and MACD turn back up as a function of price. Autodesk, another software name in the engineering and construction industry group. Looking for a follow through this week. Major volume by price support down below. RSI is above 50. Volume shows institutions have been picking up shares and holding the 9 EMA. Box is holding the 21-day for now. RSI is above 50. CTRE, Care Trust, another REIT, looking for a bounce. We do have volume by price resistance overhead. RSI is above 50. Volume starting to increase. Not my favorite REIT, but it does look good for a bounce above the 21-day, then a test of the 9 EMA, and ultimately $21 per share, and then 22, 23, 24 if we can make it through this resistance overhead. Chegg, after earnings, followed through. This is one of those stay-at-home, education-at-home stocks. It's the summertime, so students aren't really buying books and materials at this point. So this descending channel could continue. The 50 days below, and we have volume by price resistance overhead, but no big spikes in volume, showing that institutions are getting out like they were with pharmaceuticals last week. Dollar General and the discount retailer is a little disappointing. I thought that this was going to follow through last week, Thursday, Friday, pull back. The rest of the market moved higher, so this is something that we might sell on Monday and Tuesday if we don't hold the 50-day and bounce. Facebook, big cap tech and communications, holding the 21-day. This could go either way, it's sort of neutral, but we're looking for a bounce in Facebook. Volume showing institutions are giving a mixed signal for the most part, so watch Facebook this week. Fortinet in the Internet Security Group, pulling back to the support zone. 50 days just below, RSI is below 50, so respect the trend. This is probably going to come down and test the 50-day before it does anything. GMAB consolidation showed signs that buyers were stepping up. $30 stock, volume by price support. Looking for a bounce, RSI is above 50. If this breaks out, you have a measured move of about 3 or 4 points on top of this, so 34, 35 would be our short-term targets, as we saw volume over the last few days. GoDaddy showing signs of distribution. If we're going to break out, we need to do it quick. RSI is right at 50. That could dip below very quickly, moving a bit more bearish down to the 50-day moving average. So watch for, this is more neutral, looking for a bounce or a failure in the short term. GSX, this one is one of those stocks we delineated in yellow with an asterisk. It's a Chinese name. Andrew Leff seems to have a problem with this stock, so headline risk, I would only day trade it if at all. Looking very bullish last week though. Intel succumbing to some bearish news. We've got better looking chip stocks like Nvidia and KLAC, LRCX that look better. Intel looks like it could slip below the 50-day. If it does, RSI is already below 50, so look for more downside. Potentially a test of 56 this week. With KLAC remaining above the 21-day, buyers stepping up on Friday. RSI is above 50, completely the opposite of Intel. Volume showing institutions have been picking up shares. Kirkland Lake Gold as well as Franco-Nevada, both below the 50 and the 21-day moving averages. RSI below 50. Look for these gold stocks. Look for these gold mining stocks to continue moving lower. Medical Properties Trust, another REIT. Buyers stepping up on Friday. Volume by price support. A big Kirby area overhead with resistance around 21.50, 22. If you're interested in trading this one for a couple of points. Netflix below the 50-day. This needs to resume this upward march. Otherwise, it could lose the 50-day, which would put it inside of this reverse Kirby with a potential target down there at 372, 375 or so. Nvidia looking better as well. Buyers stepping up on Friday looking for a follow-through, as volume shows that institutions continue picking up shares despite the 52-week highs. Another one of those stocks in the FANG group that if you're thinking about NASDAQ failing, you need to see these FANG stocks fail as well. PayPal and a number of the payment processors look strong. Buyers stepping up on Friday at 52-week highs. A number of you in the trading room posted charts this weekend. You're seeing the same thing. So look for a follow through this week and a relative strength in the payment processors. PennyMac Financials, we've been watching this one for a few weeks as it moved above the 21-day. It's not a fast mover, but it continues this upward trend. Volume showing institutions were picking up shares Thursday and Friday, showing relative strength when the markets were gapping down and moving lower, nearly 8%. ServiceNow, big sideways range we talked about for the last few weeks, hasn't been able to break out or break down, so no follow through on this one. More of a day trade if you're interested in it. Taiwan Semiconductor finally broke out of this range over the last couple of weeks, continues to move higher. Volume suggests institutions have been picking up shares, so they're looking for higher prices. Macke's above its signal line and rising as supply tapers off above the 58 to 60 zone, and RSI is above 50 and rising. Trade Desk, many of you have been trading this one as well. Looking for a follow through. It's been trending, broke out of this descending channel above the 9 and 21 day, continues higher. We saw buyers on Friday in an area of no overhead supply. RSI is above 50. Volume showing institutions have been net buyers over the last few weeks. MACD's above its signal line and rising. Watch for Trade Desk to continue this week. Workday and stocks in the cloud space, software related names, human resources, these look pretty good. They're holding the 21 day. Need to see Workday get back above these highs to continue this bullish trend. RSI is above 50. Could go either way, so this is more neutral to slightly bearish if we do see a bounce on Monday. Zoom video showing signs that it's having troubles breaking out. I'm thinking it's going to pull back. That's just me. Volume shows that institutions are pretty active. MACD looks like it's hesitating as well. So probably midweek we'll have a better read on Zoom video if you're still in it. Make sure you check out some of these MarketSmith stocks as well in white down below. We have stocks in green that are on the volume percent gainers list, in addition to the Dow Industrials, which we'll go over in a minute. Most of these stocks look pretty good. Lazy Holdings. This is the volume percent gainers. I've gone through this list already. Beta, that's a Chinese stock, so be careful with any of these Chinese names. SSSS, this one looks pretty interesting, with stocks on the relative strength scan also looking good. Like Alarm, ALRM, big cup pattern looking like it's going to break out this week. RS line moving higher. In addition, the Dow 30 stocks that we've been following over the last couple of weeks, many of them showing strength end of day, moving above or very near VWAP. Apple, AXP, Boeing, Caterpillar, Goldman Sachs, McDonald's, Travelers Insurance, UTX, Visa, and Verizon. All of these looking pretty good going into the week. Watch these names on the daily time frame as well. You can see many of them bouncing at the 21-day moving average like Goldman Sachs. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on June the 14th, 2020 with your weekend video newsletter. We'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast, so be sure to check that out in your inbox. Bottom line, going into this week again, we're on short-term day trade mode, short-term swings. VIX is the key, so keep an eye on it. If VIX starts to move higher, that would tell you that institutions and dealers will be selling futures, not buying. If we do see a drop in VIX, that would be bullish for equities. So if you're bullish, you need to see VIX dropping off. Remember, SPY 300 and the S&P 500 at 3,000 is support. That's right along the 200 period moving average, and 50% retracement from the reversal that we saw 4 weeks ago on Thursday, leading to the highs that we saw on Tuesday and Wednesday of last week. Take care. Have a great weekend, and we'll talk to you soon.